Good afternoon. I am Christy Gruth, and I will be your moderator for today's session. Welcome to this webinar sponsored by the City of Los Angeles Department of Cannabis Regulation, Business Licensing and Compliance Assistance Program. BLC programming is designed to assist social equity applicants in Los Angeles in obtaining a commercial cannabis license and operating a successful cannabis business. This installment of our 2025 webinar series focuses on navigating cannabis insurance, coverages, liabilities, and risk management. Now, before we get started, let's take a moment to review some housekeeping rules. Please note that this webinar is being recorded and can be reviewed only on DCR's learning management system after the editing process. You will be muted with cameras off for the duration of the webinar. This means that your camera and audio functions will not be available to you during the session. However, you will be able to see and hear all the panelists. There is an open chat box where you can interact with one another for networking or comment on the information. Please use caution when sharing personal information in a public forum and keep your questions focused on tonight's topic. Please ask questions about tonight's subject matter in the Q&A box. We are gathering and responding to your questions throughout the presentation, and we'll have a Q&A session where you will also get responses in the last portion of this event. You are encouraged to utilize the Q&A box at the bottom pane of your Zoom screen. If you use the Q&A box for questions, everyone will be able to see the questions when they are answered. Finally, please note that tonight's content was not created by the Department of Cannabis Regulation or the City of Los Angeles and is for informational purposes only. This information is subject to change and does not replace or supersede the Los Angeles Municipal Code nor constitute legal advice. If you have specific questions outside of tonight's topic, please call 213-978-0738 during business hours, Monday through Thursday, 10 a.m. to 4 p.m. to speak to a DCR representative. And now I'd like to introduce our esteemed guest presenter, Jesse Parenti. As founder and CEO of JP Squared Consulting, the risk management consulting company, Jesse Parenti offers 20 years of commercial lines risk management, specializing in protecting the transportation and food delivery industry, and over 10 years in the cannabis industry nationally. Mr. Parenti's key client base includes last mile delivery, pizza and food delivery, cannabis cultivators, extractors, manufacturers, B2C delivery, B2B transportation and distribution, and wholesale organizations, including fully vertically integrated operators and publicly traded multi-state operators. He helps create custom solutions as a trusted risk advisor using safety, consulting, HR, and insurance placement. Now I'd like to ask Jesse to join me on screen. Hi, Jesse. Welcome, and feel free to start screen sharing and your presentation. Thank you for being with us today.
Thank you, Chris. Appreciate the welcome. This. All right, everyone. Today we're going to talk about insurance. I know it's not the funnest topic, but I'm going to hopefully make it a little interesting and give you some good insight on what we really need to be doing and not be doing when we're dealing with this. It's a little bit overwhelming at first as a business owner and to be dealing with insurance, whether you have or haven't. So my goal is to hopefully streamline this information for you, make it a little more easy to digest and understand the do's and don'ts of what you want to do as you establish a business. We'll be talking about cannabis liability. We talk about crop insurance. We're going to be talking about commercial auto insurance. We'll be talking about workers' compensation insurance. And then we'll be talking about what is an XMOD. So first off, let's talk about the different specific classifications for the industry. We've got cultivation and propagation nurseries. We've got processors and harvesters. We've got manufacturers who are doing pre-rolls, extraction, and manufacturing of different types of goods, possibly edibles or baked goods. We've got wholesalers and distributors who are moving things from business to business. We have the property managers and building owners who are the actual owners of the facilities or the buildings that we're having our businesses in. We've got transporters and B2C delivery, which is our direct-to-consumer delivery models. We have dispensaries and storefront retail. We've got testing lab facilities, and then we've got CBD and hemp stores dealing with the Delta 8, 9, and 10 space. Now let's talk about coverages and specific classifications. First up on the liability, we've got general liability, excess liability, and product liability. In the cannabis industry, all these policies are actually individually written. Your general liability limits start off at 1 million, 2 million, and they can go up to aggregate levels of 2 million, 2 million. Excess liability extends the liability limits, and the policy limits can be written by the carrier up to 4 million. Product liability is a separate line of coverage that is standardized and actually combined with general liability in the standard industries. But in cannabis, it's actually segmented out, and it is rated on a similar structure, which is your sales. But we'll talk a little bit more about this later on. Coverages they offer are 1 million, 2 million, 2 million, 2 million, 3 million combined CSL, 5 million combined CSL, and now most recently they've extended limits up to 10 million CSL. Now talking property coverages, this is going to be building coverage, property coverage, build out. It also can encompass crop, which is indoor crop, and that is going to be in the full life cycle of the plant, whether it be a seedling, a baby, an actual plant, a flowering plant, a harvested plant, which is plant material, and then lastly, finished stock, which is actually packaged and ready to be turned into inventory and ultimately put into a packaged good. Equipment breakdown is part of the property portfolio, where it is the catch-all of your additional coverages: loss of income and extra expense, reputation recovery, and data compromise based on the exposures that could happen to you. Now let's talk about some examples of liability exposures. General liability insurance protects your business from another person or businesses that claim a bodily injury associated with medical costs and damage to property. Some examples that could be covered are: in bodily injury, a client falls over your bag and you are legally liable for the injury. Insurance will cover the subsequent claim and related medical expenses to the general liability policy limits of the liability. Property damage and data loss. You spill a cup of coffee on a client's server, causing damage and loss of data. Insurance will cover the subsequent claim of the general liability and the loss under the liability. Personal injury. One of your employees is at lunch. He talks to an owner of the shop or dispensary about one of your clients or customers in a false or unflattering way. The customer learns of this discussion and sues you for slander. Insurance will cover the subsequent claim up to the general liability policy limits of liability, and also pay for the attorney to defend if necessary. Product liability, the biggest exposure everyone wants to talk about. But ultimately, cannabis has never killed anyone. But that doesn't keep anyone from suing you. Basically, what it's going to do is protect you from consumer and strict liability, and also defend you on your behalf. Like we said earlier, limits are 1, 1, 2, 2, 3 million combined single limit, 5 million combined single limit, and now you can actually buy up to $10 million of coverage. So let's talk a little bit about what product liability actually is. Product liability insurance covers you from any damage done by a faulty or defective product that you are responsible for. Anyone in the supply chain of the defective product can be taken to court. Examples of bodily and physical injury: design defects and product recall, advertising misrepresentations, inadequate safety warnings, and improper, inadequate labeling. This last one is the most common product liability claim that we are seeing these days. And of a true case claim scenario, I actually was part of the vape experience we had 4 or 5 years ago, and there was one of the first claims ever happened in Washington State. There was 8 people named in the claim. I had 2 of the clients, and we were named. Ultimately, we were able to defend and found not guilty or even liable. But if we did not have a product liability policy, we would have had to pay for that defense out of pocket. Consumer got sick from an edible. Another great example. We have a specific brand, and they get sued. But who also is going to get brought into the lawsuit? The manufacturing company, the retailer, the distribution company, and even the cultivator. So it is very important to make sure that you have product liability. Otherwise, you will be paying for this defense out of your own pocket. Now let's talk about types of property coverage. Under property, we've got business personal property, and that is your desks, your computers, your loose equipment. You have your tenant betterments, and your tenant betterments are actually the build out you do. If you have a dispensary, it's building out your counters, your secured areas, and your office space. If you're a cultivator, it's building out your rooms and your specific areas for your fertigation. If you're a manufacturer or vertically integrated, you have a ton of build out for separating all your different exposures. How this is looked upon is, imagine you took your facility and you flipped it upside down. If it's permanently attached, it's a tenant and betterment. If it falls to the floor, it's business personal property. And that's how you're able to differentiate and separate between these two. We talked earlier about equipment breakdown. It's kind of the catch-all. If you have a power failure, you have a shutdown, say there's a massive fire and PG&E shuts down the power, that is an insurable covered cost. But it also, you have to have equipment breakdown to get the coverage that you would have for the loss of income and possibly property damage that could happen. I had an example where we had a grow, power was shut down due to the fires. We had about $150,000 loss in a 24-hour period because of coolers got shut down, the cooling system got shut down, water got shut down, we had no power, and we lost 4 rooms. Without the equipment breakdown coverage, we would have had no coverage. Next topic about other equipment, your grow, extracting, or baking equipment, all of that is covered under property. Loss of income, like we talked about earlier, another property element that's part of it. And then you also have your crop and finished stock coverages, like we talked about with the plants moving through its growth cycle, and then all the way to finished stock, where it is a fully cured, trimmed, and packaged goods, usually sitting in turkey bags, in secured totes, and in a secured environment or vault. We talked specifically about how the crop is looked upon, and it has a direct physical loss or damage covered by the property and the premises described on it. The declarations caused or by resulting from the covered cause of loss. So crop is covered under property, but it either has to be in a specific grow room or it has to be in a secured storage area for you to be getting the coverage that you actually have in your policy. Now let's talk a little bit about commercial auto insurance. Owned auto insurance is commercial auto insurance that covers the vehicles that are owned and used by the business. Most commercial auto policies have these 3 basic components. Physical damage. This includes collision and comprehensive coverage. Comprehensive coverage pays to repair for your business vehicle when it's damaged in an event other than an accident. So if an accident and a vehicle actually has any type of physical damage while not moving, that's where the comprehensive will come into play. Your collision will come into play only when the vehicle is actually moving. Liability. This covers bodily injury and property damage to a third party when the client is at fault. So your insurance is going to cover you if you or an employee actually causes an accident, hits somebody else, or causes physical damage. This is where it'll come into play. It also is included uninsured and underinsured motor coverage. Unfortunately, 40% of drivers in California either don't have insurance or they're underinsured. So this is another level of coverage you need to make sure you have built into your commercial auto policy to make sure that if you have an accident and the other driver has no coverage, you are basically protecting yourself and insuring for yourself. Other coverages for commercial auto policies include coverage for medical payments for people in the car, towing and labor if it's needed, auto loan or lease gap coverage, and lastly, rental reimbursement if the vehicle has to be at the shop and you need to continue to be operating. Now let's talk about a term most people haven't heard much about, which is called non-owned auto insurance. This is basically vehicles that your company uses that are not owned and they are hired by your firm. So ultimately, these are non-owned vehicles that include vehicles that are owned by your employees and used for the business. So let's talk about some examples of how this comes in play. Ultimately, things like a vehicle being used or owned by a partner and in a partnership that he or she uses for the business purposes. So they're using a business vehicle that's owned over in a separate area that's used for this personal business. It is not covered under the insurance based on the current commercial auto policy. A vehicle that a company president borrows from his neighbor and then uses it for the business. Once again, a borrowed vehicle that's used on a business purpose that is not named on the actual commercial auto policy. Liability over the employee's vehicle or anyone's vehicle who's working for your company. This is the biggest one that everyone's doing. An employee basically gets in their own car, drives down to the bank, makes a deposit, and then they get into an accident. This incidental use is actually considered non-known auto exposure and can be and should be picked up by your insurance. When we talk about a business exposure, this comes down to two other exposures. You have outside salespeople that are driving their vehicle every day, personal vehicle, not a commercial owned vehicle, and driving on the behalf of the business. The other aspect is you have the B2C delivery, which is the cannabis delivery model. And ultimately, this model is based on mileage reimbursement. There's a cost that goes along with this on top of the actual cost of the insurance. This model was built off the food delivery model. And ultimately, when you look at the cost expense to mileage reimbursement, this model only works for local delivery, 5 to 15 mile radiuses. And I'll give you the example where you have long haul delivery or 1 day delivery that's going out. If you have a driver going out 100 miles, one direction, one way and coming back, you're literally going to be paying that driver 61 cents a mile and pay them $61 to drive out there one way. So ultimately, if that is your delivery model, you need to have non-owned auto for local and owned auto for long haul delivery or distribution and wholesale. Knowing your model and planning accordingly is really essential to profitability, because if you don't understand how delivery works, the cost sequences of that there are, or more importantly, you think your drivers actually have insurance, you're going to learn the hard way by either paying something significant or having your business shut down from negligence of what you did or didn't do. The coverages for auto delivery and distribution ops are different, and you need to understand them. For the delivery model, if it's owned auto or non-owned auto, you need to understand the things that we're talking about. Delivery for the non-owned auto, you got to pay for the mileage. And currently in California, it's 61 cents per mile that you have to pay. If you have the wrong model, you will be losing money, and you'll not be understanding why your insurance and your cost of this is costing so much. So you really need to do a cost analysis of understanding your parameters of your delivery map. And if you're going to be delivering more than a local parameter, you need to look at finding vehicles that you own, getting your insurance costs fixed, and then build profitability from there. Distribution companies and wholesale companies have to have owned auto. They are not legally allowed to have non-owned auto for this exposure under the state regulations. One thing I will tell you is the regulations are designed for public protection, and they are not designed for your company protection. So what the regs are going to tell you is that you need to have commercial auto insurance. That's all it says. It doesn't tell you the limits. It doesn't tell you the type of coverage. And it sure as heck doesn't actually help you understand what the differences are and what you need to buy and why. As of today, the regulation does not even enforce the insurance requirements for delivery businesses. So this is really where this problem happens, is business owners are going in for delivery. They think that they have their insurance under employees insurance. They're not buying vehicles, and they're actually having their employees go out and they have no coverage. And unfortunately, I have been in a $100 million auto claim. If you hit a bus full of children, no one has enough insurance. And ultimately, what we recommend and I encourage people to do is do this correctly. Do not cut corners, because ultimately you will make national news if you do something incorrectly and you cause not a death, but many people hurt or children hurt that are going to be permanently or temporarily disabled for the rest of their life. Regulation will not pay for a claim if you're the driver and disable or kill another person. Like I said, unfortunately, killing another person is not the worst thing that happens. If you hurt a child or head of household and they're permanently disabled, the amount of income that is going to be needed gets into the millions and even tens of millions of dollars. So please take this very seriously if you're going to be in the delivery space or transportation in any way. Basic things we talked about: general liability, minimum limits you need to have 1 million, 2 million. I highly recommend that you have product liability. I know that LA was enforcing this. I don't know if they still are, but I encourage you to have product liability if you're going to have any goods in the industry, because it's the only thing that's going to provide you defense. And then workers' comp insurance is required, and we're going to dive further into this. What you need to have legally and protect your business is not always the same. So ultimately, it's about being a business owner, having good information so you can make good business decisions. Let's talk about what workman's compensation is. It's a form of insurance providing wage replacement and medical benefits to your employees injured in the course of employment in exchange for mandatory relinquishment of the employee's rights to sue his or her employer for the tort of negligence. Ultimately, you're buying a policy that's going to protect your employee for loss of income and also medical payments if they're hurt at work on your behalf. And in return, they are signing off their rights. They cannot sue you and come after you for negligence. Ultimately, this is a really big deal and one of your biggest exposures outside of commercial auto, in my opinion. Bottom line is, workers' compensation is the only policy that will pay for employees' injuries on the job. It is specifically excluded from all other policies that typical business owners have or need. You may or may not know this, but in the state of California, if you do not have workman's comp and you are found liable for every employee and every day that you do not have coverage, it's a $500 fine. And I've seen these fines go into the hundreds of thousands of dollars for negligence, and businesses have had to close their doors. So please do not cut the corner. Make sure you take care of your employees and make sure you get workman's comp, because it's for the betterment of your employees and for the betterment of your organization. Now let's talk about how a workman's comp is actually rated and actually what it's based on, which are class codes. Each class code is given its own rate per $100 of payroll, which must be approved by the WCIRB. Generally speaking, in the risks of class codes, the higher the risk, the higher the rate. So extraction class codes, if you're doing non-volatile or volatile, usually based on what we're doing and how the C1D1 rooms are set up, you have a different payroll or different rate than you would have for a bud tender, which has a much lower exposure. In simplest terms, premium is calculated using the following formula for each class code. This basic formula is how rates are created. You have an estimated annual premium. It's divided by 100. Then it's multiplied by the rate that you were given with the class code, and the premium is ultimately what you pay. So in this example, we're looking at the estimated annual payroll divided by 100 times the rate equals a premium. So for our example, we are going to have the estimated annual payroll of $300,000 divided by 100. And then the retail class code is 8017. And the rate of that class code, for our example, is going to be $5. So the 300,000 is divided by 100 times the $5, and we get an annual premium of $15,000. And I'll show you why this actually makes more sense when we get into the next phase of what an actual XMOD is. So if you've never heard of what an XMOD is and how it actually affects your work comp, this is a really, really big deal and why you want to take this seriously. An XMOD stands for experience modification. You're given this by the state of California, and everyone has an average rating of 1.00 or 100. And from there, you will see that the XMOD statistic is used to compare an employer's loss history against the average of the industry itself. So through effective safety program and implementation and claims management, you can reduce your workplace injuries and earn a discount on your workers' compensation insurance and control your loss record. Here's the example I want to talk about. So In the previous example, I talked about the annual premium being $15,000. So in this example, which makes it easier to round our numbers, we're going to use the annual premium of $100,000 a year. If you look below, if they have an X mod of 0.75 or 75%, they're actually getting a credit on that $100,000 payroll or premium, and now they're paying $75,000 a year. On the opposite aspect, if you have an X mod of 125% or 1.25, you've actually got a debit that is added to the current pricing, and you get an increase in pricing of roughly 25%. So now understanding why having strong loss control, managing your claims, and really being proactive in your work comp process. Work comp claims are going to happen. Don't worry about that. It's how you manage them, how you take care of your employee and get them back to work. Ultimately, by being proactive in work comp, this is one of the biggest line items you're going to find in your insurance. And ultimately, if you can manage this, you're able to save money, put it back into your P&L statement or your profit and loss statement, and ultimately not give the insurance companies money that they don't deserve. Your XMOD can either increase or decrease your workers' compensation insurance costs. Insurance carriers multiply this based on your premium of your XMOD. So like I said, on that example, if you would have started off at 100,000, if you've got a good mod, you're saving 25 grand. You got a bad mod, you're spending an additional 25 grand. That's a $50,000 annual delta that you see every year. And that's why workman's comp needs to be adjusted, needs to be managed, and having a proactive process and plan is extremely effective for your organization. If your XMOD is more than 100%, your costs are going to be higher than average. If your XMOD is less than 100%, you're going to receive a discount on your insurance costs. And that's what this really is all about. Being proactive, being best in class, and getting better rates and premium than the average person. Accidents will happen. So plan and manage your claims is extremely crucial. Loss control is equal to insurance cost control. Once again, you want to save money, have a strong belief in culture, safety, and accountability, and you can effectively save money in your insurance plan and also take care of your employees, which is a strong culture to keep them with you and staying with you for years to come.
All right. Thank you, Jesse. You sure covered a lot of information and so gave us so many things to think about. So I encourage all of our attendees to think about your business and take your opportunity now to ask Jesse questions about insurance. So while you're thinking about that and use the Q&A box to ask your questions, I have a few questions I can ask Jesse right now. So uh, why do I need commercial auto when my employee has their own auto insurance?
So I kind of touched on it, and this is actually something that goes back 20, 30 years. Is it started with food delivery, and everyone's personal auto insurance now has an exclusion for business. So whether you're doing outside sales, you're actually doing food delivery, you're doing cannabis delivery, we are not aware of this, but this change has happened in the last 15 years that all of our personal insurance have an exclusion. And it basically states that if you're using your personal auto for any type of business exposure and they're not notified of it, they can and they will exclude coverage. I've been on both sides of this, unfortunately. I've had business owners tell me my employees have insurance, and I literally within a week have the horrific aspect of the employee gets in an accident. They go to the business owner. Where's the insurance? The insurance owner points to the employee, and we are literally pointing fingers at each other, and something horrific happens. I've had employees, even on their own insurance, tell their insurance agency that ultimately, no, I don't drive for work. I had a young individual on their own personal insurance because we had to request documents backwards on understanding where the coverage was. Our client actually had coverage, but it was excess of the employee's coverage, which is how the policy is written for non-owned auto. So ultimately what happened was the employee on their own personal insurance signed documents saying, I do not drive for work. And they ran a stop sign, hit a semi, totaled their vehicle, then did about $50,000 of damage to the semi. We had insurance. We actually dropped down to $1, covered everything on the vehicle. The employee, because they negated their own coverage and actually signed off that they didn't drive for work, they had no coverage on their own physical damage of their vehicle. Even with their gap insurance, they had a $7,000 gap. And the family tried to come after our client, and we had to stipulate and literally come back with all the facts of, these are the documents your child signed. These are all the requirements they had. Here's their personal insurance. And it was like one of the worst things I ever experienced in my life, but we did nothing wrong, but the employee did. And this is really where the problem is no one doesn't know what they don't know. So what I try to do is help the owners know what they need to know. So when they have hiring practices, they actually can educate their employees. How we fix this, I learned from Uber. I've been working with Uber for a long time, and ultimately Uber didn't have insurance correct for a long time. And what we had to do is help them understand that you need a business endorsement, which actually does cost money. Your personal auto becomes an actual commercial auto vehicle, but this mileage reimbursement that is required by law that you're paid to the employee covers the increased cost of insurance, wear and tear on the vehicle, and these additional coverages that we're discussing now. So these are the things that I always say, you don't know what you don't know, and you need to be talking to an expert and an authority, unfortunately, in the space when you're dealing with cannabis, because I've had people that know even auto insurance, but they don't know the caveats of cannabis. So it's really, I always say you want to, one, understand who you are working with and what you're doing. The insurance coverages, you need to understand, are you going to be doing non-owned auto? Are you doing owned auto, or is it both? I have a lot of companies that do both based on their model, because they could be doing delivery or distribution. You never can have non-owned auto for distro, so you have to own the vehicles. They also have to be secured with cages and all of the security factors that are needed. Non-owned auto is a standalone policy. It basically learned and followed from the food delivery model, but it has a limitation of geographic radius, a limitation of coverages, and they have to be stacked. So there's all these gray areas that are confusing for people. And what I really want to do is help people ask better questions so they can make sure they're buying something and not learning about it when they have a claim.
Yeah, no, that's amazing. And I mean, if a company like Uber doesn't even get their insurance correct, then I mean, I'm sure probably most of the businesses you speak with don't have a clue as far as what they need. And so again, I encourage our attendees to take advantage of this time now and ask some questions. Okay, why do I need workman's comp if I pay for my injured employee to get to the clinic or hospital if they get hurt at work?
So this actually is kind of, I've got two worst case scenarios. Early in the cannabis industry, we were experiencing this a lot. And I say this with all respect, as I'm helping drug dealers turn into business people. And I'm helping them understand that because it's a family farm, and I work with a lot of family farms, especially second or third generation family farms up in the Triangle, Oregon, Washington, helping people that are really trying to move forward into the regulated market, do it correctly. But then they just have all family, and they don't look at the family as employees, and they're paying them. One of the worst experiences I ever had, I had a son, his arm got pulled into a wood chipper and lost his limb. And it was about $300,000 of damage to him. Not just that, he literally had change of life for the rest of his life. And because the family didn't actually have things, they didn't have workman's comp in play, this poor individual literally has a disability that they're not going to ever be able to recover correctly from. And furthermore, can't even be trained to get life skills that would have been covered through workman's comp. I mean, and what's horrific is the family goes, what would it cost them? It would have been like $4,000 a year. It was nothing. And they just didn't know. And this is, once again, I'm like, I don't care how small the business is. If you have an employee working for you, please get work on, because it's against the law. And secondly, you don't want to have the guilt of having to take care of a friend or family member for the rest of your life because you were negligent or you didn't think you needed to.
Wow, good story. Um, okay, so $1 million question, because I'm sure a lot of people don't even know where to start. So when looking for insurance coverage for your business, where do I start?
First off, I can be a resource, but I'm not trying to sell you insurance. What I actually like to do is I have a network of brokers. You really want to you want to shop your broker, not shop your insurance. That's the first thing I'm going to tell you is you need to find a broker that actually has experience in cannabis, they also are not in cannabis and you're their third client, I tell people this is the best way for you to audit and interview cannabis brokers. How many years have you been in the cannabis space? How many clients have you actually written, and what states do you work in? And how many claims have you been in? Give me a couple examples of how you handled and mitigated them. There's a lot of people that are now getting into cannabis. I have a lot of even farmers and state farm brokers and people that are like, cannabis is finally cool. It's not that I don't want you to work with them. I want you just to work with someone who actually knows what they're talking about and that they're not learning with you. It's an expensive lesson to learn in the cannabis insurance space. Pricing is getting more competitive, but it's still overpriced. And if you work with an agent that really doesn't understand the pricing structure, doesn't understand the models, doesn't have the relationship with the carriers, you're going to be at the will of the audits and the carriers themselves and not having an advocate for you. One thing that I will tell everyone on this is do not overestimate your revenues. I don't care what your business plan is. I don't care what you're telling your investors. What we do in insurance does not correlate with what you're doing over here because ultimately all of your costs are based on sales. And on your first year, you're estimating everything. You have no verification and nothing proven. So I will say, if someone thinks they're going to do $1 million in year one, we're going to estimate you do actually 250,000. And the reason why is I want someone to actually pay for minimum premiums. These policies are auditable. They're auditable one way. They will audit and take your money and not give you any back. So if you overestimate and you do not hit your numbers, they will give you no premium back. If you underestimate, and this is what I encourage people to do as a philosophy is you actually estimate very low year one, and you're going to have what's called additional premium owed in an audit in 12 months. Well, in 12 months, you will have made money. You should have exceeded your numbers. And the money and numbers you actually did those past 12 months, that's the number you use for your audit. And that's the number you use for the next 12 months moving forward. So you're never giving the insurance companies any money that they don't deserve. I had a client spend $50,000 too much in 1 year because they were adamant about what they were doing. I did not, I take responsibility. I was not aggressive enough to tell them you're doing the wrong thing. Where now I have no problem telling anyone that they're not, I'm not going to let them piss away money because it doesn't matter what you're supposed to do for your business plan. We want you to achieve that. What I will tell you is you're going to spend money that's unneeded until you actually validate your numbers. So validate your numbers, use valid numbers for what you do for your sales, and always tail 12 months. And then from there, your profit and loss or P&L statement will be in line, and your insurance costs will actually grow with you and not become a stress on you that it doesn't need to be.
Wow, such great advice. I mean, the two main takeaways I just got were one, interview your broker. I mean, how many brokers expect to be interviewed and actually ask questions about how, their experience in the cannabis industry? So that's great advice and a novel concept. And then two, yeah, no one wants to throw away money. So why people would want to overstate and pay more than they need to when
What I found, Chris, is it's not so much they're trying to overstate. They've got a business plan. They're sticking to it. These are the numbers we're going to hit. Problem is that the brokers are working with aren't actually looking out for them. They
yeah,
actually don't know that they're going to get hammered with huge AP, and that, or let's on the flip side, I'll handle big AP because you blow your numbers away. We have money. If you overestimate and you don't hit the money, you're not getting it back. So the one benefit for this process is what you do for your general liability, your product liability. And then for your workman's comp, it's also an auditable policy, but it goes both ways. So if you do overestimate, you do get that money back, which is also by law, and that's the benefit of it. I always tell people when it comes to work comp, it's connected with your payroll. I would encourage people to do what's called a pay-as-you-go, where you do a monthly audit and reporting. And then when you have your annual audit at the end of the year, it's really close. And if they owe you money, they owe you money. If you owe money, it's like 1 or 2%. It's not a big check. So it's another mechanism to help people's P&L, not give the insurance carriers money that comp's going to give it back, but that's your money. So hold on to it as long as you can and only give it to them when they need it.
that's right. Okay. Uh, are there banks and payroll companies that specialize in cannabis?
100%. The banking aspect has gotten a lot more flexible than people realize. There's much more banks out there than people realize. What we have is the tier one banks, Wells Fargo, Chase, B of A. They were involved. They quietly pulled themselves out because of Schedule One. You have a lot of tier two and tier three banks, credit unions. Southern California, you've got East West Bank, you got First Citizens. There's Santa Rosa Credit Union is a great credit union. Valley Bank's another one. There are a lot of banks now. Prism out of Oklahoma, they're another one. There's a lot of banks based on regional areas. What is still lacking is a true national presence. I also work with a couple groups called DAMA or Fund Canna. They're kind of like banking aggregators. So depending on where you are, California is our market here, but based on where you are needing, they can help negotiate, or they actually help manage the banking relationships for you, and then also can help you with fixed costs. So for those, once again, you want to be interviewing them. You need to go talk to 3, 4, 5 banks. I also encourage have 2 banks at all times. You need to have 2 banking relationships, because if you do only have one and you do get shut down, and it does still happen these days, you need to not have the stress of, oh my God, my account got shut down on Friday. What am I going to do by Monday? You need to have a second bank that you can pivot to. I know First Citizens has helped many people have this fixed. So is East West. They've helped people pivot really quickly. They are cannabis pro banks. There's not First National. There's a couple other ones, but ultimately there are a lot of cannabis banks and credit unions doing this. Same with payroll systems. There's Greenleaf. There's multiple companies right now. If you actually Google cannabis banking, cannabis payroll, you're going to get a full page now of cannabis preferred providers. I work with most of the ones that we just talked about, either as preferred vendor or referral partner, mainly for the fact that they've put the work in. We don't want to be working with industry partners anymore that don't have the experience of cannabis. We've had a huge learning curve of helping experts and authority figures in other industries come in. And now we've got strong attorneys, CPAs, banking, payroll, HR, safety. There's a large portfolio of trusted professionals that have at least 5 years experience that are cannabis specific, and some have as much as 7, 8, 9. And I'm the only one. And insurance wise, I got 10 plus years. There's about 5 of us there. Beyond that, most people have been learning how to do what to do, and which is great, because this is an evolution in our time where over the next 25 years, we've got opportunity to change the world, and I'm excited to be part of it.
No, that's great advice. And of course, we've all seen those banks, heard of them, East West, Citizens, and I had no idea that they were cannabis
I
friendly.
mean,
So,
it's kind of those things when you really dive into the industry, you'll find out who the partners are. But I will tell you, just cannabis banking, cannabis HR, you look up cannabis and then put those toggles you're looking for. SEO's picked it up. There's enough people that have basically risen and brought additional credibility to the industry so that we can have trusted professionals that business owners need to depend on, and they also can feel they can trust them.
okay, great. Um, we're still waiting for some questions from our attendees, but as we begin to wrap up here, how about, is there any other area that you feel people should really know about and you would like to elaborate on?
I mean, a couple of things that I would encourage people to be aware of is there's exposures that are in the normal world that we may think about, that we may think are not approaching cannabis yet. But one's called EPLI, Employee Practice Liability Insurance. It is hot as hot can be. This has been a major exposure in all other industries for the last 20 years. It's now affecting cannabis. We ultimately now, this is the defense as a business owner that you have for and between you and your employees. What we call it is he said, she said coverage, where you could be blamed or accused of something, whether it was done or not, and you still have the duty to defend. So that could be sexual harassment, discrimination. Sometimes it could be ADA. I literally in Southern California, being in hospitality for 20 years, we've had ADA claims we've had to deal with for, we call them drive-bys. There are 11 statutory things that someone can accuse you of. You have to prove that none of them apply. And if any of them do, every time that applies, it's a $10,000 fine. So these are things that are covered through EPLI that are not covered on your general liability, not covered in your product liability, and you need to have them I always say when people are small businesses, they don't think much about it, but 5, 10 employees, I've had people have claims. So if you have to get an attorney, retainers are anywhere from 20 to 25,000 bucks. It is worth looking into these policies. The deductibles are not low. So ultimately, this is going to be something for a business that might be a little not cost effective, but you need to look into it. And at bare minimum, you need to have a strong HR company that can help you with defense. Everyone should have an HR department. Sometimes the most people doing it internally are not the most qualified. So having a third party out resource option is another valuable resource. To an HR and legal counsel, that's a really big thing you need to be paying attention to, especially in California. It's such a litigious state that these are the areas that if you don't, you can get bitten very easily, and they can cost you 10, 20, 50. I've had discrimination claims. Someone had to write $100,000 check and they didn't even do anything wrong, but they got named and they didn't have any defense. It didn't show they didn't do anything to prevent this, and the courts hammered them, for an example. So another example of having a policy to provide defense to help. Cyber liability, we all know about cyber theft. It is happening more and more every day, and dispensaries are being hit harder than people realize. So you need to make sure you've got your firewalls. You do need to realize that if you are taking any type of data from customers or vendors, that it is susceptible to be breached. And if it is breached, you are liable for it. And you've got to do reputation and also outreach, which is extremely costly and very much time consuming. And these policies not only supply defense, they also supply loss of income and reputation defense. So two other low-hanging things that I always recommend people look into. Even if you don't buy the coverage, you still want to get the quotes. I've had people say no, and every year we present it. In year 3, they're like, we can afford this. We've always wanted it, and now we can get it. So I always will tell people, I'm going to give you as much information you can have to make good business decisions. And then let's figure out what is financially feasible and build. I mean, I remember early years, it took 2-3 years to help people build what they wanted to have, but they couldn't afford because it was just expensive, or they didn't have the money yet. But they knew this because they brought these business senses from another industry. They're like, this is something we have to have, but God, that's expensive because we were having a cannabis tax. So it's always things where the industry is maturing. We're now getting better pricing. We're getting better products. And ultimately, I will encourage everyone, be a best-in-class operator and you will rise above. And then from there, you will attract everyone and anything that's happening in this industry to help you, whether it be vendors, supporters, partners. The community is very strong, and ultimately we all want to rise up together.
Very wise words. All right, a couple of questions have come in.
Awesome.
One person that just says iPhone. What was the aggregator that you mentioned? If you could elaborate on that.
I'm trying to think what I was talking about. Aggregator.
Um,
Aggregator what? I apologize. If you can
I'm
elaborate on that, I can definitely expand.
trying to look back in the slides. Well, if the person who asked that
If you can elaborate
question,
on that, I'll gladly understand.
yeah.
I apologize. I don't understand
All
the
right,
context.
we'll move on to the next question from Dr. Brown. How does cannabis business insurance compare to other industries?
So insurance is insurance. It is no different. The difference is what we've found is the standard carriers, Travelers, Allstate, Farmers, all the carriers we know in normal insurance, they won't touch it. It's a Schedule 1 drug. So because they won't touch it, you've got to be working in what's called the surplus lines or just cannabis market. We do have a couple admitted products that are admitted by the state. And the difference between what's called surplus lines and admitted is just state filings. There really is nothing different when it comes to insurance coverage. But I have had people tell me, "Oh, I've got auto insurance and I've got coverage," and I review what's called a certificate of insurance or their policy, and there was State Farm, and they're written as a retail store, and they really bought a piece of paper, and no one will know anything until we have a claim, and then the whole thing will get denied.
Wow.
So really what you go, once again, it's working with an actual broker who specializes in cannabis, and then you'll never have that issue. I've experienced this more times than not where I literally I love my broker, but 20 years, and they don't know what they're doing, and they actually could cause some serious financial troubles for the actual person they're trying to help because they just don't know any better. And that's why I always say is if you're in the cannabis space, I don't care if you're a broker, challenge them and interview them, because if they can't give confident answers, there's other brokers that I can refer you to or you can find very easily that do specialize in the space. They've got minimum 3 to 5 years experience. This is either all they've been doing or it's one of the verticals they work in, and they will be able to advise you much better than someone just trying to help you as your local broker.
Oh, great. Okay, well, I think we can begin to wrap up here. So again, I'd like to thank you, Jesse, for presenting and giving us all this information today. And I'd like to thank all of the attendees who were here today. And again, this has been an informative webinar offered by the City of Los Angeles Department of Cannabis Regulation. The webinar recording will be found in DCR's Learning Management System. If you have any questions on accessing your account, please email dcr.sep@lacity.org. And thanks again for joining us. Have a wonderful rest of your day. Thank you.